I see it. Well, we'll give everyone a couple of minutes to get in here then. Good morning. Can everyone hear me and see my screen? Quick little check here. Check, 1, 2, check. Okay, beautiful. This wonderful tech age, we always got to make sure our crap is working right. So, like I said, we had to create a quick new stream here, so we're going to give everyone about a minute to come in. We will not go all the way up till the open, guys. I don't want everyone to be rushing at the end. So, I haven't done this for a while, this particular kind of walkthrough. So it may take 20 minutes, may take 45, but we'll get going. I'm going to walk through the tools that I use, how I set them up, and specifically what I'm looking at for the morning. I think it's a big challenge with it's futures. Everything's been open a while, but I actually had this conversation a couple of times with a couple different people the last few weeks. Do you trade the evenings and this and that? And I wouldn't rule it out completely in the future, but I do pretty well during the normal session. And I've learned the hard way over the years that I can't be one of those people that is just obsessing over everything in the markets for 20 hours a day. I don't have that level of energy, right? And so I do very well. You don't have to worry about me, but I may not make as much as I could if I traded for 10, 12, 14 hours a day. But I'll be honest, I really value being at my computer for 3 to 4 hours for trading and 2 to 3 hours for coaching and education type stuff, and then being done for the day, right? There's a lot of days that even before the bell rings, to end the day, I hit my profit target. I've gotten back to all my emails, and I can go home and do whatever the hell I want for a few hours. So for me, I very much value the flexibility that trading gives me. As I've told you guys before, I'm not a big things guy. I'm a big experiences guy. I like traveling. I like doing that kind of stuff. So having the type of routine where I trade for 10 to 12 hours a day doesn't travel on the road with me, right? I got a nice little trading laptop that I use that I'll bring on the road, and I'll trade for 2 hours in the morning, right? Everybody's still waking up, I take in fact, I'm taking my family to St. Louis for opening day baseball in a couple of weeks. I'll bring my laptop. I'll work for 2 hours every morning and probably trade half size, but if I can make a few $100 each day while I'm there, great, right? So my routine in the morning is sort of really kind of designed to have some information, but I don't like to have a gigantic bias going in, right? In days that the market moves a ton before the cash open, before the New York Open, I'm not always a fan of that. My favorite market days are the ones where the market gets going about 30 to 60 minutes in. Okay, so let's just run down bit by bit kind of what I pull up and what I'm looking at, right? So the very first thing I pull up is this news feed. Wow, that just shrunk everything, which I didn't mean to do, but that's okay. This is Trade Exchange. Now, guys, the tools that I'm using today, I don't have any sort of affiliate relationship with them, so I'm not going to be dropping a ton of links in the chat or anything like that. So you can look them up. But I do think for day traders, you need some kind of news feed. Some programs have them built in. Trade Exchange I've been using for about 6 years now. I love it. The cost is fairly reasonable. It's about $500 a year. They have this little squawk that I'm going to keep off during this. But basically, it's there's a guy that it's thankfully not a creepy robot voice, but that reads some of this out before it hits. Guys, I've used a lot of different news feeds over the year. These guys are, in my opinion, the best bang for the buck. They're just as quick as some of the really expensive ones, and it's a nice wide range of information. So I'll pull this up, I'll get this all set up, and then it goes up in the corner of my other monitor. So obviously you're only seeing one monitor at a time, so I'm pulling things up a little bit by bit. Okay, guys, this right here, this is Edge Pro. This is my get the chat back up in case you have any questions. There we go. First of all, good morning, and thanks everyone for being here. Hopefully you take something out of this that can help you going forward. So let me just really quickly kind of break down what this is. This is basically my master market chart. Okay, when I'm looking at anything in the equities, whether it's ES, NQ, RTY, YM, any big decisions that I'm making that involve the equities, this is sort of the chart that I'm always looking at. And I'll put some things on this chart as the day progresses, right? So to start off, I've got the first thing I'm going to do is I'm going to look at the hourly chart. So right here, 60-minute chart, 5-minute chart. Okay. So the first thing I'm going to do is I'm going to look at the 60-minute chart. Okay. What happened overnight? Was there any big movement overnight? And the answer today, of course, is yes. There was some pretty big movement overnight. So I'm going to be looking at what was the volume, what was the volume delta, right? Which is the difference in bid versus asks. So basically buys versus sells, delta change, and overnight. Especially as we got the Asian Open, the European Open. I mean, again, you want to be really careful ascribing too much to a low volume move, right? So some of these were at least relatively low volume to what we're seeing this morning, but still very bearish action overnight. So does that give me a bearish bias? I mean, let's see how we open, right? But so this is just the general, 30 seconds. I look at this and say, oh, okay, we came down a good, what about 50, 60 handles in the ES overnight, right? So kind of push that to the side. And then I start looking at my 5-minute chart. All right. The first thing I'm going to look at, I'm not marking anything yet, but I'm just going to look at where over the past couple of hours have we seen some support and resistance, right? Because, Asian, European, early American markets are open. So you can actually sometimes glean quite a bit of information off the, let's say 2 hours-ish before the markets open. Looks like we attempted to rally up to 39.50. Which was kind of a key area yesterday in spot gamma, which we're going to pull up spot gamma's report and look at it later. But we really couldn't rally up to that. So now we're retracing, right? So very consistent negative deltas this morning, right? So just, buyers, and this is one of the reasons I like delta, guys, and I don't want to get too off on a tangent here, but sometimes this type of action can be a bit of a leading indicator, right? And we did go down while this was happening, but look, again, accumulate sellers, boom. Eventually there's got to be some kind of correction there, right? So this is actually a really nice pattern that I look for intraday, but important to note it and at least point it out on the charts. The other thing, and now this just starts loading when I pull this up, so you'll see down here the relative volume. This isn't something I really pay attention to until the open, but the first 2 or 3 candles here are going to be very important to me. So what you see here, this yellow is the volume of this candle, right? And the little white kind of skeleton in there, that's the relative volume. It's the average volume of the last 20 periods of this candle, right? The average. So what I mean by this is this little white thing in here, right? This kind of little skeleton or little bone, you want to call it. This is the average volume of the last 25-minute candles, 5-minute candles at this time period. So it's not talking about these 20 candles. It's talking about the last 20 candles of the 5-minute time frame at 7:30 Central Time. Okay. And so what this means is, this doesn't mean a lot in the pre-market, but the first 2 or 3 candles that after open, so that, again, I'm speaking on Central Time, the 8:30 candle, the 8:35 candle, the 8:40 candle, the 8:45 candle, if that will kind of at least begin to set the tone for what kind of volume day it's going to be. I don't often trade in the first 10 to 15 minutes, guys. Usually I let a couple of opening ranges get set, right? I'm a big 15-minute opening range guy. I'm a really big 30-minute opening range guy. For those of you that attended my summit last weekend, we talked a lot about that, right? But again, so this isn't as much pre-market, but once the market opens, it's going to give me a clue, because higher volume days have certain characteristics that lower volume days don't have, and vice versa, right? It can be easier to break key support and resistance areas on lower volume days, right? But if volume then comes back in the afternoon, okay, some of these support and resistance areas, some of these key, call and put areas are going to need to be tested again to confirm breakouts, right? Okay, so now is kind of where let me get my okay. let me get, so this is kind of um my morning Bible here, guys. So sometimes I put a clip or two of this in the room, but this is Spot Gamma, just spotgamma.com. Um, so these guys are sort of options experts, as it were. Well, Matt, we're trading futures. What are you worried about options, right? Well, there's a ton of options liquidity that comes into the SPY, the SPX, and that can have a huge effect on futures, both from the dealers having to buy or sell certain things to hedge their positions, and or the big boys, where is the gamma flowing, right? Where is that delta, that all of it, all the Greeks, right? I for to trade futures, you don't need a deep understanding of the option Greeks, but things like delta, gamma, and theta, I think for anybody that's a day trader should have at least a kind of working understanding of those terms, right? So this is what I'm going to do. I'm going to sip my coffee. I don't have my camera on, so you can't see, but I'm going to sip my coffee and I'm going to read this, right? And so it's just I'll leave this up for just a second, and it kind of breaks it down. So these, again, are these guys right every time in their predictions? Of course not. Nobody is. But they're right more often than they're not. And in combination with other materials, it can give you a little bit of a thesis. Again, there's a difference between having a thesis and having a bias, right? For futures day traders, we want to avoid having any kind of bias, right? Because that can influence our decision making. And in this case, guys, we want to make sure we don't go in saying, well, this is what's got to happen, right? Because then, if we just assume the markets um, are gonna fall, we get into a situation where we're going to seek out confirmation bias in our information, right? And rather than waiting for a good confirmation in the price action, we're going to sit there and hold on just a second here, guys. Okay. We're going to sit there and quite frankly make decisions based on information which may not exist. But we can have a thesis, right? As I always tell my clients, what is a trade? A trade is where a thesis meets a setup, right? So you have a thesis of what's going to what a particular, okay, I'm expecting to run into resistance here and retrace a little bit, and then you see that happen in the price action. That's a thesis meets a setup. So what they're saying here, if the break of the 3950 can hold in the cash session, we give weight to the S&P testing the 3900 SPX put wall. Okay, don't worry too much about these charts and stuff, guys. But I do recommend checking these guys out. Again, I don't have any sort of affiliate relationship with them or anything, but it's just spotgamma.com. They have a more expensive tier that, if depending on what platform you use. In fact, they do this in Bookmap, they do this in Edge Pro X. They can automatically, you have a cloud notes that automatically put the key levels into your trading platform. I actually like putting them in manually, and we're going to get to that in just a second, right? But again, I'm gonna break this down. Is that I'm gonna read this. I'm gonna just, again, is every single sentence as important as the last ones? No, but they're going to talk about options expiration. They're going to talk about the call wall and the put wall. So here's kind of what I'm looking at, guys. So again, I don't want to get too heavy into terminology and all that, but basically the call wall sort of macro upper level resistance, and the put wall is sort of macro lower level support. And in this case, the put wall's down there at 3900, right? So that's one of the first things I'm going to do on this chart. And I try to clean up my drawings every day, guys, right? Going with a fresh let's see. And I'm just going to go down here. Oh, no, I don't want that. I'm sorry. Okay, well, I'm just going to make this a red color for now. That's not it. All right, yellow's fine. Okay, so I know that yellow there is the put wall. So what's the thesis there? Okay, the thesis. So again, I'm already formulating again, not a bias, but a thesis as to some potential trades, right? So let's say we drift down another 20, 30 points into the open. Okay, for my style of trading, if we open at 39.15, there's really not, that's only 15 handles, and I got to find a good entry. So there's probably not a trade there for me until we come into 3900. At 3900, there's a lot of different things that can happen, right? So what Spot Gamma is basically saying is that this put wall, it's gonna take some work to get through there, but if we get through there, boy, we could really sell off today, right? So right away, and this is before I see, the open, before I see anything else, there's going to be a couple of things that I'm going to look at playing out on this with this put wall, right? This is just from my experience of trading this over a couple of years. We could have the old-fashioned break, retest, and go, right? And I'm usually going to use some form of ATR to help me on that. Like we get an ATR below 3,900, ATR on the 5 minute. I'm probably going to try to see for a retracement back up here, right? Because most likely, and again, this is again, all we're doing is playing probabilities. The probabilities do not favor a break and a continuous move through here, right? Does that mean it can't happen? Of course not. Anything can happen moment to moment. But if that happens, I'm just going to sit there and watch it because there's not a particular setup for me. I need to see this area tested and a confirmation that this area needs to break. So again, I can say what I call the break, retest, and go. So we get down here, at least one ATR, right? Retest, it doesn't have to be to the tick, right? And it can actually go over a little bit, but then a retest of this general area, and probably, I'm just spitballing here because I haven't seen the price action, then a break above about 38.90, and let's see if we can't get 20, 30 points out of that, right? The other thing we could see happen, just a simple test and then a fail. Okay, so test, retest, and fail is break, retest, and go, and test, retest, and fail. So people that in my mentorship program have heard those things again and again and again, right? So just basic. Again, I'm keeping it very, very basic before the open. We can get into all sorts of different levels and the volume profile, the point of control, all that kind of stuff. But right now, I'm just looking at candlesticks. I'm just looking at key price levels and formulating a general thesis of what I think is going to happen. Right now, the other thing, of course, that can happen is we could rally or we could just stay the same. But right now, based on what I'm seeing and what I'm reading, this is my general thesis, which I can throw out 10 minutes into the market, right? That's certainly possible. Now, if we go, let's say, down to about 38.60 or below, if we retest, I'm not necessarily looking for a reshort there, right? But it all depends on the price action, and that's why I have these bad boys in here, right? So if we see something like this happen, right? The break, retest, and go, and we never see buyers really step in here, right? Because this is, in any candle in a trend, right? So we've got a candle, 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 and then maybe we have something here, right? We've got kind of a break candle. One of the, in trend trading and momentum trading, one of the key questions we ask ourselves is, when a candle like this pops up, is this a rest candle or is this a reversal candle, right? And how do we determine that? Well, basic candlestick patterns, right? Key levels of support and resistance, and then this volume delta, right? This is the candlestick form of that, right? So if this is a rest candle, but we don't see heavy buying, right? And well, we really didn't here, but then I'm looking probably for a reshort, right? You can play, everyone wants to say you can hold for the whole move down, right? And sometimes you can, sometimes you can't, but it's important to pay yourself, right? When you are correct. So if we were to break down here, pay yourself, on the way down, and then you can reload a short. I don't personally do this, but I have a very good friend who's more of a stock trader, right? He loves to reload and trade around a core position, right? So let's say this was a stock. He sells short 100 shares as it breaks down here. Then it comes here. He'll buy back 50 and then reload that 50 as we head lower, right? So it's called trade. The concept. It's more in swing trading than in day trading, but the concept of trading around a core position. I personally do not do that in futures, but it's probably something I need to look into because he's very successful with it in stocks, right? Okay, so the next step I'm going to pull up my Think or Swim. That's going to take about 15 seconds to pull up and load up here, and I'll show you what I'm looking at there. Take this off the screen. I'll just minimize that. All right, so I've showed you guys this before, but I'll pull it up now. This is sort of my little market monitoring station, right? So I've got the VIX, I've got the ADD, and I've got the ticks. The ticks aren't loading right now, and actually the ADD is really not loading much either, because it's again it's New York Stock Exchange data as it's coming in, right? So the exchange isn't open for another another 34 minutes. So and again, I'm not necessarily interested in where any of these three are. Okay, but I want to know what's the trend, right? So if I see, if I'm looking for a long or if I'm looking for a short and I see volatility breaking down, I may want to reconsider that, right? Doesn't mean it's completely a cancellation of the trade, but especially if I'm in the ES or the NQ, I'm gonna want to know what's going on in these three. Now, about half the time that I'm in an NQ or ES trade, these three don't tell me anything one way or the other, right? They're close to neutral or slightly up or slightly down. They don't give me an edge. And actually, very rarely do these things get me into a trade, but more often than not, they keep me out of losing trades, right? So if the ADD is a negative 1500, right, and I'm looking for a long trade, I may reconsider that, right, unless I see this begin to drift up. Okay, so I told you that one screen that I used in Edge Pro is kind of like my general. Here's my main screen in Thinkorswim, right? So this is sort of the battle station for any of my VWAP based trades, right? So I've got VWAP here. I've got a small tolerance band around +1 and -1 standard deviations. Let me zoom out on one of these so you can kind of see the whole thing. And then there's the +2 and the -1 standard deviation bands. I also have ATR badges up here for the ES and the NQ. These can help me in terms of where to set stops, but more often than not, they're again, they're just telling me what's the price action looking like, what's the volatility. If the ATR and if the 5-minute ATR in the ES is 8 or 9 an hour into the open, we've got some good movement, right? If it's sitting here, 3.7 is not a great ATR right now. We're not open yet, but or the cash open isn't going yet. But if this would be 3.1 in the afternoon, again, I may increase position size is looking for smaller moves, right? So this is just kind of a general, hey, how much are things moving today, right? Okay. So just have the ES, the NQ, the CL, and the GC. This is basically, I have this TTM squeeze down here. I'll be honest, I've never had any success using this as a trade entry trigger, right? This is built into Thinkorswim. This is an old version of John Carter's squeeze, but I do use it occasionally, again, as a hey, you know what? Maybe you should take a second look at this trade, right? Like if I'm looking for a long trade and this thing is drifting down and beginning to fire a potential short, a move out of a squeeze, I'm, again, that and then the ADDs are against me, I'm probably going to stay out of that trade, right? You'd be surprised. The more experienced you get in trading, guys, the more a lot of your indicators aren't necessarily ones that keep you in trades, but they keep you out of trades, or get you in trades, but keep you out of trades, right? Okay. So, kind of the final step of this process is so I've told you basically if I'm looking for an ES trade, right? If I'm looking to do something in the ES, and again, this is kind of expand that a little bit. Come on. Okay, but this is sort of the screen I'm looking at, right? There we go. Okay, so as I will go in and label some more stuff here momentarily, but one of the reasons I like Edge Pro X, guys, is it's the drawing tools, right? So let's say, obviously, we have a support area. This is pre-market, right? We have a support area right down through here, right? Every time the price action is moving into here, we're bouncing out. This is a oversimplification, guys, right? But we're seeing some negative delta here, right? So this could be an area to watch for a breakdown as we move into the open. Now, as far as the NQ goes, I am all on trading view, right? So I have a small 5-minute look at the candlesticks, right? And then this is sort of I've had more and more success trading the Renko charts, right? With the NQ. It's a cleaner picture, right? So you can see one of the first things I'm going to do is, because again, I am very heavily biased towards the cash open, right? And the New York Open from 9:30 to 4. I usually want at least 15-20 minutes of flow into the markets for me to begin to again, formulate some ideas. So one of the first things I'm going to do, guys, I'm going to clear out all these drawings. Okay, so we're down here now. Now, obviously, we're still 30 minutes to the open, but let's say we were approaching the open. Because Renko charts are time-based and not price-based, I do want to know where the market's open, right? And it's not always apparent down here in this weird little thing. But let's say it's 9:30 Eastern right now, the market's open. The first thing I'm going to do is slap a vertical line in there so I know where the open was. Does this mean I ignore the support and resistance areas pre-market? No. I don't ignore them, but I do not give them near as much weight or near as much consideration as I do ones where the market is open. Now, if the market opens and it confirms these levels of support and or resistance, that's great. That gives me a lot to work with, right? So let's say in the first 10, 15 minutes, let's say we drift up here. Okay, and then we begin to head down. I'm going to be sitting here. Hold on. There we go. I'm going to be sitting here slapping in lines every time a different high or a different low is made, right? So let's say then we, okay, come back up here and go. So I'll be putting in a line here. I'll be putting in a line here. And breaking of these lines in an established trend is a big I'll get to your question in a second, Aztec. This is a big setup for me in the NQ. Okay. Now, so let me just give an example, and I always gotta be careful talking about setups outside of like a course type setup, because I don't want people to come in, hear 30 seconds of it, next thing you know, I'm getting an angry email. And yes, that happens a lot. Thankfully, it hasn't happened. Well, it hasn't happened at all with you guys, with the Blue Sky guys, but in all the places I've worked, I'll go. Here's a setup, a setup that I use, and it goes, and if I do an event on a Saturday and I talk about a setup like an opening range setup, and on Monday, the trade fails, right? I know I'm getting an email at least, right? You said this would work, blah, blah, blah. You wouldn't believe the crap that I've dealt with over the years. It's part of the business though. And like I said, you guys have been great, which is why I like doing these events for you. But yeah, so just for example, let's say we get into a downtrend, right? Okay, just a basic downtrend, higher or lower highs, lower lows, right? On a candlestick chart, sometimes this can be a little messy, right? There's not always necessarily good areas of consolidation to get in trades, et cetera, et cetera. So for me, let me change this color. So we're in an established downtrend, right? And again, I know this is a kind of an ideal situation, guys, but we've had a lot of these types of days, right? We've had a lot of days where, breaking, it's not necessarily a previous low, right? But it's breaking down within areas of, or outside of areas of consolidation. So breakdown, consolidation, breakdown. Every one of these entries could be a potential trade, right? So again, if I'm looking to break, we're breaking down, but again, I'm not seeing volatility pop. I'm not seeing the ADDs. Maybe the ES isn't breaking down as well. It's going to make me hesitant on a trade. The best days for me in the indexes are when one is a leading indicator of the other. Usually it's the at least the last year or so, it's been the NQ is a little more of a leading indicator of the ES. There can be some opportunities there. We don't want them trading in lockstep, because then we don't, again, what was the day last week I complained in the chat room, all four of the major things that I trade, right? ES, NQ, CCL were like all moving together. Well, that's not four instruments, that's one, right? That cuts down all the potential trades I could have day to day, moment to moment, right? So you seem laid back. Are you trading from the beach in the Bahamas? No, I am not. I'm trading from, and I just got a text from my girlfriend that says, "Hey, did you see we're supposed to get like 8 inches of snow tomorrow?" So that's great. Now I'm in the Chicago area. Actually had a gorgeous day yesterday, and we're gonna pay for it apparently. But one of the things and I appreciate you pointing that out because I don't again we always hear, right? What do you hear? You've got to eliminate your emotions in trading. Well, guys, I've worked with a lot of traders over the years. That's really tough to do. It's natural to feel frustrated sometimes when you're losing money. It's very natural to feel excited or whatever when you're doing well. The problem is not feeling those emotions. The problem is letting them interfere in your decision making, right? So I'm big in kind of compartmentalizing my trading, and I'm able to celebrate wins and commiserate failures, but also move on to the next one and not let that affect me, right? Getting into things like revenge trading and all of that takes, losing accounts to blown out accounts. And I can tell you that from experience, right? But yeah, one of my mentors in this business, she always impressed me so much because no matter what kind of day she was having, that you wouldn't be able to tell it from her voice, right? Very measured, very okay. Yeah, this, that. Yeah, front running. No, yeah. Me and my 20 to 25 micro position size. Yeah, I'm running those exchange. Come on. So, no, but I mean, there's guys, this is the futures market. There is a lot of dumb money in the futures market. And we like dumb money because, when we become the smart money, we take dumb money. And guys, don't just assume just because somebody's an institution or they're playing with a lot of weight that they're smart money. That's, it's one of the reasons I really, the futures market is, in my opinion, probably the hardest to trade overall, right? Like, especially on a day trading basis. But there's just so much liquidity, and B, the big boys aren't always right. You go to the options chains, guys, traditionally, you look at huge option buys or sells or whatever, especially in individual stocks, whew, they're right a lot. And again, that's, it's kind of one of the ways the deck is stacked against us, right? So if somebody knows something and they buy, 5,000 calls of Apple, right? Well, that's a bad example. Well, yeah, let's say 50,000 calls at Apple, right? That's going to drive the premiums up. So even when you and I see that, there's not necessarily an opportunity to get in at a similar price, right? So yeah, that does happen. Quite a bit. So, but in futures, you'll see the big. I don't pull up Bookmap, guys, until the open because it's a resource hog, and I try to not have it on when I'm streaming. But Bookmap is the other tool that I use. I'll do a thing on that one time. It's kind of a bit for people who haven't used it. It's a little bit of a culture shock, right? It took me several months of watching it but it's basically a chart that's liquidity based, right? So we have Renko charts are price based, candlestick charts are time based. Bookmap is just liquidity based, right? It's showing where the big orders and the big liquidity is in the futures markets. It'll show you where the icebergs and the stops are. I don't want to bring that up because if somebody's unfamiliar with it, 10 minutes with it, you're going to be like, oh, this is great. And then you're going to go get it and you're going to be like, what do I do? So I'll go over how I use icebergs at some point. I'm actually doing them a little more and more over the past couple of weeks. I got out of the habit of looking closely at them, but as the markets have just had these weird intraday reversals and kind of been ignoring some of the tradition. As much as I love the call walls and put walls, they haven't been as reliable the last few weeks, right? As far as areas for potential breakdowns, breakouts, etc. So for me, that can really help. And again, not maybe necessarily getting into trades, but getting out of trades, right? Like I can maybe, if I'm in, let's say we break this area up here and I'm long at 910, right? And I'm saying, okay, my goal is 950, but then I see huge liquidity come up here at, 960. Maybe I'm going to say, you know what? I think I'm going to take those extra 10 handles and because price moves to liquidity. It's almost a universal constant in the markets, right? It may not move that on there in our time frame, but when you see, especially in the ES, when you see huge orders sitting there on the books, and you can sometimes see these in the dome. I like the visual representation that Bookmap has. then you can see it's just it again. Or let's say I'm looking to get long at 910 and I see some huge buy orders dropping in over here, like, so we're heading up here and I see huge buy orders dropping here. You know what, I'm not taking that trade. I'm going to let these clear the books before I head up, right? um in general, if you in bookmap as well, if there's a big stop area, right, like a huge stop order gets filled. So this is, let's say this is a stop buy, somebody getting out of a short position. Very often you will see a move away from that and a retest that area. So I don't do a lot of scalping, but that is one area that I will occasionally look for a shorter move, like 10 to 15 points in the NQ. I don't do that often. That's only a few, a couple times a week. All right, so guys, we went really quickly. We went over a lot of stuff, so I encourage you to check the replay of this. But I do have about, let's call it 5 to 7 minutes for questions. If anyone has questions on the routine or things that I'm looking at pre-market. Michelle says, who was your no, pardon me for not she's not she doesn't sell education and she values her privacy. But it was kind of a friend through a friend, and um yeah, so I don't want to evade the question, but I kind of, it's not like I signed anything, but I kind of gave my word I wouldn't put her out there. Ah, yes. So, J Pal, all right. But again, the lessons my mentor taught me were mostly mental and psychological, right? And so uh I that's why I favor that. That's why those are the things that I spend the most time with, guys. And some of them, in I have a very high ticket mentorship program where I'm basically in your hip pocket for about 6 months. But you know there's 8 to 10 hours of one-on-one time in that, guys, and those people that have taken that will tell you more than half is spent on trading psychology, right? And looking, go, I mean, it's directly related to your actual trading. um but when how do you manage success, how do you manage failure, guys? I will tell you this is something I hope all of you find out. um when you first begin having consistent success in trading, it's more difficult to manage than when you're struggling, because when you're struggling, at some point the mistakes you make will force you out of the markets, right? Whereas when you're having some success but maybe not maximizing that success, you can feel like you're spinning your wheels, or you can get into being a yo-yo trader, right? You're up, you're up 1K today, you're down 800 the next day, then you're up 400, then you're down 600, and you're doing a lot of things right, but it's just that, one or two key mistakes to get over the hump and have that continue to move up. Okay, yeah, so as Josh put in the chat there, Powell 30. So doing a 30% off the 5K plan, that sounds like a pretty good deal. I think it's pretty well priced, 100%, but if they're going to give you 30% off that, guys, take it. Do I consider VIX options or skew? I used to look at so much of that stuff, but again, that spot camera report sums it all up very well. And so it's kind of a one-stop shop. So I don't have to go looking in options chains or anything like that. And most of that stuff is built into the big levels in the ES and the NQ anyway. Yeah, Dojima, that's a good point. And that's why you have to keep both a trading journal, like, of your actual trades, and a mental trading journal as well. Because I mean, listen, guys, I mean, I'm pretty good at this. I have red days. I have an occasional red week. It happens, right? If you're planning every day, every week to be green, boy, I don't know what to tell you, right? It's been a while since I've had a red month, but there's some months I haven't made a lot of money. That's really, and when I get to the end of the month, this happened about 9 months ago. I got to the end of the month and I was like plus. I'd had a couple really bad days where I did some really dumb stuff, very out of character for me, at least recently. And I was up, I think, just like 2K at the end of the month, which is decent money, right? It's decent money. But to work all of that time and, basically looking like I was in an hourly job, and nothing against hourly jobs, but that was pretty frustrating. So, well, but again, how are your red days and your green days, right? If you're for example, plus 500, plus 800, minus 300, plus 200, minus 100, plus 500, plus 600, minus 3, keeping those days and the losers small is how you stack success, right? Um, I've worked with traders. I've told the story many times, so I won't tell it again. But there was a guy, a small cap trader that I worked with many years ago, that had a 70% winning percentage. He was losing 10 to 12 grand a month because every one of his losers ate up 5 of his winners. Guys, I will tell you this: very rarely, very rarely. Yeah, I don't want to pull numbers out of my you know what, but probably has only happened once or twice this year. Do I take a loss in an individual trade more than $1,000? Right. That's why when somebody talks about the daily, in the evals, the daily, if you lose $1,000 that you're shut down for the day, or you fail the eval, or all this, um, that like doesn't even phase me, right? Because that rarely happens. And one time it was a fat fingered mistake. I got into more contracts than I wanted to. So there's only really one trade that I mismanaged to that point, right? So when I can sit there and rack up, plus 1,500, minus 700, plus 600, plus 700, plus 300, minus 300. But again, that's if every one of my winners eats up 2 of my losers, I'm going to start again. That's how you grow accounts, right? It's really not that difficult, guys, to have some winning trades and build up the account. It's hard. Well, let me rephrase that. It's kind of hard to make money in this business. It's very hard to keep it. What's my max win per trade? I'm not sure I understand the question. I generally, guys, I try to avoid getting into this is how much I do or I make and all that, because I don't want to limit people, right? Like I've had clients that I work with that are starting to make just as much, if not more, than I do in the markets, and that's great. Again, I'm not willing to be 16 to 18 hours invested in this per day. I'm just not. So maybe I don't make as much as some of the guys that spend that much time. That's fine. I'm gonna go out and have a nice dinner and enjoy an evening out. I got tickets to a show on tomorrow night, so assuming they don't cancel it because of the snow. So Friday especially, guys. Generally Friday by noon I'm done, and I don't touch anything till Sunday night. All right, guys. One more question if somebody has it. Otherwise, max win. Well, again, I mean, ideally, if I can, again, when I started, I'm trying to answer this without again limiting people, but my futures trading is basically, let's call it project 1K a day, right? If I can average that over the course of a week, a month, whatever, not to say there's not some days it's more than that, or some days it's less than that, but if I can do that at the end of the day, I feel pretty good, right? That's a nice month, right? I will say this, guys. Before I started trading, I was like a part-time, coach. Coached a couple different people. I worked in adult education. Helped people get their GEDs and stuff like that at one of the local education centers here. Those 2 jobs combined, I barely made more. I almost make as much in a month as I did in a year in those. Okay, so is my net worth where I want it? No, but you know what? I have no debt, right? I paid cash for a new car last year. If things keep going this way by the end of this year, and I'm waiting for the pullback, I'm going to pay cash for a house, right? So may not have a ton in the bank at that point, but I'm going to have very few bills and a really nice couple of assets. So that was one of the best advices I got when I first got in this is, just don't worry about buying everything or doing this or that right away. Put your head down, work your tail off. And if 10 years from now you can have, a house without a mortgage and a car without a payment and not have to worry about emergency expenses or stuff like that, whew, that's the life, right? You want some of these other guys can have, all this, tens of millions or whatever. I set very, very, the SMART goals, the achievable, time frames, all that good stuff. So, all right, guys, we got 10 minutes to the open. So I'm going to cut out. Appreciate you guys showing up and checking this out. I'm gonna get with Josh. We'll come up with the schedule. Probably just do a normal Q&A at the usual time next week. Q&A with a topic. You know how I do. So, all right. So everyone have a great rest of your day. Trade green. I'll be around. Again, Powell 30, Powell 30 gets you 30% off of a 50K. That's a really nice, really nice account, guys. So, all right, everyone be well. I will see you guys in the room.